taxations. He is also going to cover up certain ITR filing issues. So without wasting much time, I request immediate past convener Javed Savasa to introduce briefly.
Thank you very much, Hiren for giving me the pleasant task of introducing the first speaker of the session, Sri Hardik Mehta. He is a fellow chartered accountant and he has also cleared Certified Public Accountant CPA US examination. He also holds a degree of Advanced Diploma in International Taxation from UK. He is having a post-qualification experience of 15 years and is specializing in advising clients on exchange control law and regulations, transfer pricing regulation and international tax law in India. He regularly advises on US federal tax matters to Indian NRIs, HNIs and subsidiaries of Indian companies in USA and assists them in filing their US tax returns. He is a managing committee member of Bombay Chartered Accountant Society. He is having tie-up with professional services firms in USA and UAE. His major publications are FEMA Compounding Orders, a comprehensive analysis published in Bloomberg, India, Volume 1 published on July 2019 and Volume 2 published in October 2020. He has written various papers and articles published in UAE City Law with India UAE Tax Treaty, New Saga in Chapter of India Mauritius Tax Treaty, Import of UAE Corporate Tax Law. He is regular author in Monthly Journal of Chamber of Consultants on FEMA updates and analysis. He has given various presentations in the UAE transfer pricing courses, demystifying global taxation at HSBC Bank, HUF awareness workshop at I1 Finance, TDS under section 195, TDS on reimbursements. With this brief introduction, I request everybody to welcome the speaker of the session. We would like to present the memento as a law and officer from the our study circle. Also, I request him to present the contribution of CABF. Thank you very much. With this, I request Hardik to take over the charge.
Good morning, everyone.
Good morning.
Thanks, Hiren Bhai, Vasa sir, Sikandar ji. So I was just saying to them that this is first time I am speaking at BCSE in Shamkuch only. Because till date I always been, I think 3-4 times I have been there at Bhatiyawadi. So for me, and I have never been to this, hall. So I was like, where is this, in the morning. So I thought I should leave at least 20 to 25 minutes early if I don't find it. But anyways, it's good to come back to our own, and this is a study circle. I always, and Borivali being, one where I take it as, being part of this study circle is not something that I am here going to do a monologue. So let's have an interactive sessions. In the past, whenever I have shared my insights on topic, I always had good interaction from the participants, and that's, I think, the way to learn on both these sides. Today's topic, basically NRI taxation, income tax, FEMA aspects, is something which I would say is now very common. So let's take a poll. How many of you have NRI clients either on advisory or compliance? Can I have? Great. I think most of you. And those who don't have would definitely have some cousins, brothers, sisters जो अपने पास मफत की एडवाइस लेके जाते हैं, right? So recently, and this I will take 2 minutes before we go to subject proper. So I just returned back from a work trip in the US, and I was speaking at a CPA gathering, and I was told by someone that though you are sharing your thoughts, but here no one can ask any question to anyone casually. And we CPA here will never tell anyone if you go in any wedding that I am a CPA. The moment we say 10 जन आ जाते हैं advice लेने के लिए, and we have no practice of speaking more than 2-3 minutes on any queries without any billable work. I said that the same approach if we follow, I think we would all have one Haveli here. And so the point is, I think to some extent, and it's been blessing that we are in a country called India where it's so diverse, people from various backgrounds, and it gives us opportunities to look at various matters. I normally, whenever I'm learner for life, so whenever I take any matter, I come for any advisory. Fees is primary, of course, but apart from that, if there is something which I have not done earlier, it makes me more excited about that assignment. What we are going to cover today? We are going to cover taxability of non-residents, NRIs, FEMA and related aspects for NRIs, and certain cross-border situations. I will, rather than going through slides, you will get these slides, 60 odd slides. Some of them are very basic, more informative. So of course I will go through slides, but rather than reading the slides, going through the slides, I would like to share some real life experiences and would like your views also on the same. Now, since we had a poll and most of you said that you always, you have clients either on advisory or compliance side. So, how a person becomes NRI? In our day-to-day life, we have seen, and this in last, I would say, 2 decades more, even earlier, most of the parents would like their children to go to US in their teens, late teens, early 20s for doing MS, MBA, XYZ, whether you go to US, UK, Canada, Australia. They go on a separate visa called, let's assume we take the US as an example. They go on a F1 visa, which is a student visa. After that, once their studies are completed, they become eligible to work there. Their visa gets changed. And this is the step where, if we are servicing the parents, the first question will come without any, I would say heads up. If the kid is going in August 25, parents will come to you July 25. अरे ये साल का रिटर्न तो हो गया लेकिन पता है मेरा लड़का जा रहा है US. Now you tell me what I need to take care of. And we are caught off guard, And most of the informal talks, oh, he's going to US, okay, great, and for next year we will file his return as an NRI. But there are many aspects which people forget, and if you don't, then it's good. But since I have come across this multiple times, I will share with you. So what happens? This is one scenario. Another scenario, suppose someone is working with some IT company here, Infosys, TCS, and the company sends them on deputation for 2 years, 3 years for work, on work visa. There are such clients whose returns we file, very basic, simple returns, they have Form 16, capital gains and interest. But the moment they say that we are shifting to overseas for work, what are the steps, what are the questions which we should be asking them, or rather than they should be telling us without we being giving any advisory on the same. And I tell you why and from where I am coming. I have seen many people who have shifted overseas and still continue their bank accounts as resident savings accounts. This is the foremost contravention which a person is doing. RBI under FEMA, regulating FEMA is not going to regulate directly, it's going to regulate through banks. Now banks are not going to come to you and tell you that, boss, because knowing Indian banks, branch manager is more worried about deposits and loans, right? He is not worried about you recategorization of your account or something. If you say that I'm going overseas, most of the bank managers, with no insult to them, but they are less aware about this law called FEMA. And this is the first place where I feel there is a lot of contraventions in that sense. And why I say contravention, I am using this harsh word because it is. I am not shy of saying that it's fine, but yesterday we had a FEMA conference and I was part of it, and it was casually said that there are so many NRIs who still have their resident savings bank going on, transactions happening, which is not in line with FEMA. Now this is one point. Now what happens when person goes overseas? He will do lot of, I would say, transactions, let's assume, giving loan or spending money or X, Y, Z. Now, he knows he's an NRI. You know he's an NRI. Unfortunately, I have seen people still filing the return as resident. Have you come across? The return will be showing only Indian income. See, let's appreciate one fact that income tax has made our life very easy. पहले क्या होता था, क्लाइंट के पास बोलते भाई तेरा बैंक अकाउंट का पासबुक भेजो, वो 3 बैंक भेजता था, चौथा बैंक रह जाता था. अभी तो उल्टा है, आप मत भेजो, मैं आपको बताता हूँ आपके पास कौन सा अकाउंट है. So the life has become very easy rather than we, waiting for their details, touch with to AIS, we know most of the stuff. And I don't know how much, I just read it, I've still not tried because I think most of the returns will be filed after 15 June. But ITR 1 and 2, if I correctly remember, this time pre-filled returns are going to be there. If you go online and if you just proceed ahead, there will be a return form tabulating all the figures from your AIS, the online version, not using any software, right? Most of you must be using software, right? But if you are going directly in the login of the assessee, he can, in my opinion, will be able to see pre-filled returns for simple ones. This is what my reading of an article day before yesterday. So what happens? All these things, income tax will never come to know your residential status. They will come to know what are your bank accounts, what are your income, what are your transactions. But the moment you don't correct your residential status, it's one of the blunder, I would say, it's a Pandora's box which I think you should not go into. And I'm telling you this from a very real life example. There was a person who had gone to UAE for work, for business. Unfortunately, business could not pick up in gems and jewelry. He came back in 2 years. And I remember that was my first work trip overseas, and when we went there and we said he wanted to come back, and he said that, Hardik, can you please help me as to what money I should transfer, how I should transfer. I said okay. And then we completed that, and after a couple of years he got a notice. And there were some large amounts which were received from overseas. So it was very obvious that it would be flagged off, that why so much. Then I said, okay, I'm happy to assist you. Please share me your return of income. And the return of income was filed as assessment. Now, the problem was, it becomes a very big onus on you to say that my return filed as resident is non-resident. I was non-resident, I filed as a resident. And what income tax, for income tax, the first section is very simple. You filed as a resident, you are not disclosed your foreign income, you are not disclosed your foreign assets. I will levy XYZ penalty under so and so section. Now you keep filing up to IDA. So the point what I am trying to say is, before going into subject proper, before going into what are the issues, let's make sure that we ascertain the residential status of our clients correctly and timely. This is, I think, one of the most important things which one should notice. And while we go, I'll come to know that, I'll let you know what are the benefits of being an NRI and what are the pitfalls of being an NRI which you should not be doing while filing your taxes or while doing any transactions, both under income tax and FEMA. I know BCSE does so many of sessions, so I'm 100% sure this study circle must have witnessed many presentations discussing residential status under income tax act again and again. But let me tell you, I remember this, Soli Dastoji, when once I went to him for an opinion and I was told, every time, even after 60 plus years of practice, if you go for an opinion with him, he will again open the income tax act, read that section again. It's not that he doesn't know, but every time whenever you read the law again for particular facts, there are new nuances which will come to know. So though we must have known this by heart, but I think it's better to go through that once more. And I will tell you what has changed in recent years and why it is very, very important to debunk some of the myths which people carry in their mind. So everyone knows that there are two primary conditions under Income Tax Act. 182 days, 60 days, 365 days. If you go for an employment, you become a non-resident and your visit to India, instead it becomes 182 days instead of 60 days. Now this was changed some years back with a dual condition which another came was as 120 days and income more than 15 lakhs. It was known as deemed residence and you will become a RNOR. Though you were a non-resident, but you can become RNOR. But if you read that clause very carefully, notwithstanding anything containing clause 1, an individual being a COI having a total income other than income from foreign sources exceeding 15 lakhs during the previous year shall be deemed to be resident in India in that previous year if he is not liable to tax in any other country or territory by the reason of his domicile, residence and any other criteria or similar nature. Now, if you read this, it says only and only this condition can only apply if you are not liable to tax in any other country. Now, the problem is people forget what do you mean by liable to tax, and there was a couple of amendments which came. In fact, I remember when Madam Finance Minister announced this on 1st of February, she had to come on record on 2nd of Feb that we are not targeting any Middle East, NRIs, because there was no tax for that matter in UAE or in any of the Gulf countries. And they are one of the biggest pool of NRIs who send money in India and they invest in India, and of course they would be earning more than 15 lakh rupees. But the spirit of the law is that this tries to target all nomads. Now what do you mean by nomad? Nomad means I am not resident of any country. I have known many business groups, many high net worth individuals who plan their affair in such a way that they don't stay more than 90 days in any of the countries and they are known as nomad. They don't become resident of any of the countries. Now such individuals are being targeted by this. You might come across certain countries. Let's take an example of UAE, one of the countries where there was a huge UN crime. There was never an income tax act in UAE before this, 2024. They came out with the decree in 2022 and the first financial year from which the corporate income tax has been introduced in UAE. But that doesn't still tax personal income in UAE. Then can I say I am liable to tax? See, by statute there is Income Tax Act, but Income Tax Act has exempted all individuals earning income, salary, interest, dividend, and only the business income is taxable. Another thing, if you read India UAE DTAA, let's assume for a moment, you might be, the assessing officer might say that you are still not liable to tax because you don't pay taxes in UAE. But under India UAE DTAA, the clause on Article 4 on residence is very clear. If I spend more than 183 days in a calendar year in UAE, then I am a resident of UAE. So the point is, suppose if you are resident of UAE, you spend more than 182 days, and if you can get a TRC, then there should not be problem of this liable to tax or for this 1A being applicable to you. Another important point was, what if I have more than 50 lakhs of income and I don't have a TRC. What happens if I become an RNOR? This is very, very important to understand. The implications of becoming a resident, non-ordinary resident from non-resident. And let me tell you, there is so much of fear. Arey, boss, keep your income below 15 lakhs. Don't come to India more than 120 days. You should be in India only up to 119 days. And what happens if you stay more than 120 days? Your income from business and profession controlled from India gets added to your income computation. Nothing else changes. Let me tell you, the difference between computation of income, total income computation between a non-resident and RNOR, there is only one difference. And let me show you that, we have tried to tabulate. Income received or deemed to be received in India during the current financial year, it is taxable in all things. Income accruing, arising or deemed to accrue, arise in India during current financial year is taxable in all three. Income accruing or arising outside India from a business and professional control in or from India is taxable in ROR and RNOR. It is not taxable in non-resident. And if income is accruing and arising outside India from other than India, anything you receive outside India, it gets taxable as ROR, but it doesn't get taxable in RNOR or in non-resident status. So the point what I am trying to say is, we should be mindful of that. One, if you have more than 15 lakhs of income, if you stay more than 120 days on a visit to India, still you have TTs. Now, there would be a situation where a person might be going to a country with which India doesn't have a treaty. Yes. Then you are in a very tricky place, because then you don't have leisure of falling back to treaty. Then you go back what the Income Tax Act, and then of course again the pitfalls of becoming a RNOR from a non-resident. Now let me cover another part, very important from an NRI perspective. Now we have understood what your income computation changes when you become an RNOR. But very few people, and I think most of the senior chartered accountants would be doing this in the past. Whenever a person comes back to India for good, generally, and let's assume you have been outside India for more than 10 years. I'm not talking about someone who has gone for 2 years and have come back. Let's assume I have been non-resident for many years. Generally, first 2 years, you will be able to categorize yourself as RNOR. And then only you become ROR. This gives you a leeway to plan your affairs in a way so that your taxability of certain income still remains outside India and doesn't become taxed in India. I have seen in very rare cases someone, of course I don't believe in 3 years, but someone was saying that no, we can go for, I don't think, still think so, there is 3-year possibility, but it might be in the past, not in currently. So the point is, if you are a non-resident, if your client is a non-resident, and we do this very regularly, we normally tell them do's and don'ts, both under Income Tax Act and under FEMA. We send them a write-up that please, while you are coming back to India for good, make sure you do X, Y, Z. This is very important for you to make sure that your subsequent filings, your subsequent compliances go without any hassles. And let me tell you, in certain countries we do have knowledge or day-to-day experience of their tax laws. So in those countries also there are very important points which need to be kept in mind. Let's assume for that matter US. How many of you have clients NRIs from US? Give me a hands up. Oh. So there are reasonable number of people. So in US also, when you leave US, it becomes very important because US sabka baap hai. Baap in the sense, they are like a bully of the world, right? There the life is one of the worst nations to be a tax resident from income tax perspective, because they tax you on your citizenship, on your green card, and on your days of stay. So even if you have NRIs who are coming back to good, and I have seen many senior citizens, who are US citizens because their children have gone there, they apply for green card, they get citizenship, but they would not like to call 911. They would rather have some relative taking them to hospital if some unforeseen happens. So they always come back to India. This was something told to me by one of my clients. I told you, you have a very good business here and everything. Why you are shifting to US? क्या हार्दिक US कौन जा रहा है? ये तो बच्चों को ग्रीन कार्ड मिल जाए इसलिए हम लोग US जा रहे हैं. So we applied in EB5. They got the green card. We got the green card. We can go every now and then. But I would never like to be there. I would like to come back. The problem becomes double. Now, if you come back, still you are able to file your taxes in the US. Your worldwide income. Now, once you come back and you become an ROR, now there are two countries who are going to tax you on worldwide income. Now the Pandora's box opens. Now what happens on foreign tax credit? What happens of income which you generated in the US? How it will become taxable in India? What happens if income is first generated in India? How it becomes taxable? I have seen some novel, clients. अरे बेस्ट है, इंडिया में इनकम टैक्स भरते हैं, उसका क्रेडिट वहाँ पे लेते हैं, वहाँ पे इनकम टैक्स भरते हैं, उसका क्रेडिट इंडिया में लेते हैं. No outflow of tax. I said, sir, I hope you are not telling this to any IAS officer or anyone, because this is not something how the law works. So what I am trying to, we will of course go through all these little issues in detail. What I am trying to plot in this first half an hour, would like to say is, make sure you evaluate your client, and this is our practice. And let me tell you, we have also learned this. If you start giving do's and don'ts to your client, it will not only help them, it will help you also. And recently, I had a talk with one of the CPA. He's an Irish. So ये problem India का नहीं है. Client पैसा नहीं देते, आधे घंटे call का या 1 hour meeting. It is worldwide. He was saying कि Hardik यार, client comes to us, तो बोलेगा 2 call करो, Zoom call कभी तो. Now you don't have to meet people post COVID. Everyone is like, if you tell, I don't have time. We don't want your time. You sit in your office, we sit in our office. Just give us time to have a virtual call. So you cannot even escape that I don't have time to come to your office or do it. So what happens, most of the clients will ask you certain queries on call and everything, and you can't bill them or they would not be liable to pay. So what we have started is, anything, whatever we do, we say we are not going to give you any overall advice, not also return opinion, but we will prepare a note for you. The moment you prepare a note for you, it is documented at your office what you have told them, and you can also bill for that. And at the end of the day, why this is very important, I have learned this hard way. There was a client who sold his overseas company and he had capital gains. He had talked to me before selling the company. I had given him an oral advice. And while filing the return, I said, I remember that you had sold your company shares and you are. हाँ but हार्दिक आपने तो बोला था वो taxable नहीं है. I said, where did I say it was not taxable? It was a foreign company shares. You are the Indian resident. I told you if that was a company which you sold under FEMA, you can keep that money outside India. That doesn't mean that it's not taxable. See the client, he's a layman. आपने बोला बाहर रख सकता हूँ मैं, because that was a company when I incorporated on resident. So I said yes, under FEMA you are allowed to. तो बाहर पैसा रखना और income not taxable, these two are two separate issues. So then मैं बोला काम पकड़ा. अभी आज के बाद if you are asking any such matter, you send me an email. I will answer you on the email. So tomorrow I have a record that I have given you X advice. Tomorrow, because now he has to pay interest on the advance tax which he has not paid on the capital gains. So the point what I am trying to say is, if possible, whenever you are doing any NRI returns, and especially people who live in different time zones, it's very difficult to talk to them every now and then. You will always miss one or the other thing. Now let's go with one of the very, very Not available for students means I didn't get you.
Students are going abroad, and we have to count for the residential status for this year. We have to count 182 days or 60 days.
182 days. 182 days is the primary condition. And the problem, yes, you are right. The problem becomes what happens if that person has stayed 60 days in the current year and 365 days in the past year. But that actually even applies to even people who go on employment post 2nd of October. Okay, because in that case you stay more than 182 days in India. So that's something, so this is also good you brought this point. Now, income tax, I always say two things are certain in life. I would say, I quote it what Benjamin Franklin said, debt and taxes. And taxes is not always logical. It's more of, you cannot make law for each and every case, in each and every permutation combination. Now this 182 days becomes very, very important when you are planning your affairs, if you are going on a deputation from your company. If I am a person who is working with any of the big IT companies, and if I am told that I have to depute outside India, I will tell them please depute before 30th September. I would not like to go after 30th September because then I would be taxable even in India for my foreign salary income. And this becomes very important for even for people who are going to Middle East. Because in Middle East, if you go to a deputation to a UAE company, UAE doesn't have any tax. Why I should pay taxes in India for the salary income which I earn in the UAE? Now you might say, Hardik, what happens to DTW? We'll look into that. But in general, your life becomes very complicated and you might be liable to pay extra taxes if you go on an employment outside India post 2nd and 3rd of October as you count 182 days. No, student will go in there 60 and 365 days because if you go on, that is only for employment. That's 60 days. Then, so even if you stay more than 60 days and 365 days in the past 4 years, you will still become a resident. Now that's where I think we'll also cover this. Students is very tricky. Even under FEMA, students are given an option to be a resident even while they are outside India. So we will discuss that students, but by and large, 8 out of 10 people as a student, they won't be any much income. Well, of course, Indian income will invariably be taxed, whether you are resident or non-resident, right? But when you are going for studies, you won't have any foreign income unless you are doing some university part-time jobs or something like that. Yeah. Now this is very, very important. How many of you have clients in Africa? Any of the African countries? Okay. It's not much, but yes, I am telling you why this is very important. See, NRIs, as we read it, income is largely, I'm not going to go into that definition, but income is largely, if income is received in India, income accrues or arises in India. This is largely the taxability of income for NRIs from Indian income tax purposes. What happens to income under the head salaries? It says service rendered in India, then there is this rest period, leave period, and income earned in India. And then of course if you are government, employed by government, then it is also to a citizen of India for service outside India. Now let's assume you are not employed for the government. Now why this is very, very important? I have seen some clients in the past who are residents of Uganda, Nigeria, and certain African countries where the currency, local currency is not safe. So they get their salary in USDs. Or their employer gives them an option of remitting that money in INR in the home country, which is India. Now why this is a little, I would say, litigative or little tricky position. If you are employed in Uganda, working in Uganda, but you receive your salary in India in your NRE account, or for that matter NRO account, if you very literally read the section 5.2, income received or deemed to be received in India. Next. So it becomes, on the first reading, it becomes taxed in India. But if you read section 9 along with 5.2, technically the intention of the law is not to tax you on the receipt. For NRIs, the taxability happens on whether the service is rendered in India or income is earned in India. Why I am using NRE account to receive my salary? Because I don't have confidence in the local banking system in the country where I am having employment. And trust me, anyone if you ask any of the African residents, they would definitely say that no, we would not like to, if we have an option, we would rather receive the salary in India, except for certain local expenses which we would like to avoid. Now, there has been a very good amount of jurisprudence on this matter. In one of the cases, Calcutta High Court said that the interpretation of 5.2 of the Act is as much as if other provisions of the Act are contrary to Section 5.2, then such provisions will have an overriding effect over this section. Now, when you read 5.2, it starts subject to the provisions of the Act. So, suppose if Section 9 says that your salaries is taxable in India only if you have earned income in India, service rendered in India, then that overrides the receipt portion. That's what is coming out from this. The Supreme Court has said that locations where the salary is received is of no consequence with respect to taxability in India. Therefore, the view establishes that the relevant criteria for determining the point of taxation of salary income in India should be based on the right to receive and not on the receipt of such income. In another Calcutta High Court matter, it was said that it is essential to find whether income of the person concerned has accrued, which is equated to the place where the services are rendered. And 912 clearly states that the situs of accrual of salary income is the situs of service rendered. Unfortunately, I always tell, in today's era of Instagram reels, आप किसी को बोलो earth is flat, आपको 10 रील मिल जाएगी earth is flat वाली. Everyone has something to say, oh yeah, I am right. Your opinion will be validated by some other thing. Sometimes I feel the kind of jurisprudence which we have, our opinion gets validated by one or the other judge on lighter note. So in certain cases, if the facts, but we have to see the facts. Certain times what happens, we say, oh, when we go for litigation, I have case laws also for this, I have case laws also for this. Mind my view, it is not the same. Generally, it is fact specific. So don't find your validation or your, in that sense, negative view just because you have a case law on both the sides. And that happens in such case also, where Bombay High Court, Honorable Bombay High Court has took a counter view in Air Fernandez versus ITO by laying down that the receipt of salary in the country is sufficient to give that country has a right to tax on such salary income, which was highlighted in another case. But the inference was made considering two essential elements. Income did not suffer taxation in any other jurisdiction. Receipt of salary in NRE account in India was the initial point of receipt by SSA, and he had no control over such funds before being credited to such NRE account. Now, what this says, if I have to advise someone, if we have to advise someone, two things we need to be mindful of. If I am receiving salary, first of all, I would first say, don't receive your salary in India. Sorry to say, we might lose on certain deposit, but the right thing is to tell them, because of the lot of neobanks, you can now have accounts in various world, MNC banks online, virtual banks, right? If you don't want to receive in Uganda, you can still have a UK bank account which you can access from Uganda and you can receive salary there. The point is, first is you should not receive your salary directly to India from your employer. Let's assume if you have to receive, you make sure that you have a TRC of that country and your income which you receive in India is taxable in that country, it's just the receipt is coming to India. Sorry?
separate chapter of taxation for that matter. In fact, it becomes complicated to prove on which ship, Indian flag ship or foreign flag ship, right? So I would right now put, this is not with regard to crew member. I tell you why. Their problems have been known by the government and they have tried to address the same. But what I am talking about is a general thing, and this becomes very, very important where people don't know, and that's why I said Africa as being a continent. Because in most of the clients from Africa, they generally have this feeling, if we have NRE account in India, any money received in NRE account is not taxable because interest is not taxable, so I can receive any amount in NRE account. That's not the case. So be mindful of where you are receiving the salary. A very strong case, if the services are not rendered from India, in my opinion, it should not be taxable in India. However, you have a Honorable Bombay High Court decision which goes against you if you have certain facts similar to what that was.
Sir?
Yeah.
Sir, from income tax point of view, there is a client who is an NRI and he came to India, he stayed here for 4 months and he was renting services, staying at working. Will that income, salary income become taxable?
Yeah. So this is now. I'll try to address this on a general rather than going on these 4 months because there are a lot of things. There are a couple of case laws, if I correctly remember, Mehta, there was a case law where person had come to India after leaving one of the employment, going on employment to another country. So left employment in Germany and then went on employment in Japan and stayed in India in between. And the stay was more than 180 days. It was reckoned that you become a resident of India irrespective because you were laid off or something. Now, salary, if you read the pure reading, if you are in India, and this becomes very important post-COVID era, because most of the companies have started giving remote, in fact, in EU, European Union, and even for that matter, I won't say US, but in European Union, many of the countries have specific provisions, even in Singapore for that matter, that if you are a resident of that country, but you are residing and working for a foreign company, and you were earlier there, you were just here on remote work, you have certain exemptions and you have certain way how you compute. Unfortunately, that is not in India. So if I go by what the section is, if I am rendering service from India, then it becomes difficult if I receive in India. If I don't receive in India, then I again go back to my journal, 182 days, 60 days, 365 days. Because let me tell you, this goes even for businessmen. If I'm a businessman, I'm staying in overseas, but I come to India for 5.5 months. Do I stop doing business for 5.5 months? Can income tax me on for 5.5 months income? No. If I'm a non-resident.
For salary, it says services rendered.
Correct. But sir, that's the whole point. If services is rendered in India, income should be accrue and arise in India. Now, when I am coming to India, I am coming on a visit. How can income tax come and say that was you are a non-resident, but because in that 3 months you came to India, you are doing these services, but my salary is still there. I am just doing the remote work. I have not seen any precedents where income tax has gone after such cases. The moment they go after such cases, whatever little NRI results we have, it will also come down. Because fundamentally, we have not tried to change our law for many, many years. I have not gone through the recent new income tax bill, which is like the old law in the new bottle. Not much has changed. So that's why I have not tried my head. And what I have known after the select committee meeting, that a lot of the changes is still going to happen in the new income tax bill. So whatever we study, we might have to re-study again and again. So so my answer would be, if you are a non-resident, even if you are working for 2 months, 3 months, I don't foresee if you are not receiving your salary. Yes, if you receive your salary in India, and even if you are there in India for 3 months, the income tax can come after you that both of it is in India and you might be taxed on that income. Dividend paid by, so this is any other income we have tried to adjust salary. For income which is deemed to accrue and arise in India for a non-resident would be income paid by an Indian company, even though this has been paid outside India, it will be taxable. Interest, royalty, technical fees, if paid by India to a non-resident, it deems to accrue in India, even if it is for the purposes of business outside India, but if you are earning from any source in India, then it might become taxable in India. Now, I remember one of the sessions at BCSC only, few years back, I think so in 2020, was on section 195 in Borivali. And let me tell you, this is a section on which you can have a full day seminar, right? And still you will be going with lot of questions in your mind. Unanswered, yes. And section 195 is one of those sections which have given so much of jurisprudence or so much of litigation, I think no other section can match. Now, there are two aspects to this. If you are, and this is very important for people who have Indian clients and they are their directors and MDs who shift overseas, but they are still receiving the salary from Indian company. You must have many people, I don't want to stay in India in COVID because there are no vaccines. I don't want to stay in Mumbai, which is like matchbox things. I want to stay in villa outside India, but I have business in India. I will work from there for Indian company. I will receive salary in India. No sense. Now your question would be, Hardik, that's very simple. If you are receiving salary in India, it will be taxed. Under 192, it will be taxed. Now what happens to payments other than salaries? Now, a very classic issue which comes for most of the people is rental. If I am taking a property on a rent from a non-resident, my problem becomes very high because I have to deduct TDS under 195. Abhi main individual, I have to take the 10. I have to file TDS return. So sometimes I feel this is a deterrent for not taking rental from a non-resident client. Now there are non-residents who are also very smart. No, I am not a non-resident. There are resident savings banks also which is going on. And you pay into that account. Now see, he's okay doing contravention, but you will also be doing contravention because today, and I think this is very well settled law, the defaulter even is a person who is not deducting tax under that section. So the point what I am trying to say is, if you are making any payment to a non-resident, rental or otherwise, this becomes even compounded when you have capital gains. When you buy a property from a non-resident and he has capital gains while selling that property, in most of the cases he will become very furious if you tell him, boss, I will deduct 20%. So capital gain. And when you say 20% on the total value, because you don't have the capacity, technically it should be IT officer who should be doing the calculation. Or you can have a CA certificate going by Vishaka Port Trust decision. But it will be again litigated. So in most of these cases, what I think I have seen nowadays, either you make an application for lower deduction by filing form 13 under 197. I think reasonably now, I think you get the disposal in a month or two. If you don't, you have to be very tough saying that I will deduct the entire 20% of the sale value. You file your return. Today, India is one of the countries where the refunds get processed the fastest in the world. So you will always get the refund in your bank account. For that, you need to file your return. I have seen many NRIs who never file their return. So recently, when I was there, I met a group of Indian NRIs, and they were like, अरे हार्दिक इंडिया में पैन और आधार लिंक करने में बहुत प्रॉब्लम होता है, इसको हम लोग रिटर्न फाइल करते हैं. Now I told you, but who told you to take Aadhaar? On the first place, why you took Aadhaar? You are not liar. You should not be having any Aadhaar card. अरे वो तो मिल रहा था, अरे मिल रहा था तो कोई, but as a non-resident you cannot. You are a US citizen. You are a US citizen. You are residing outside India and you are taking Indian Aadhaar card. And then you are complaining that I cannot have a problem linking PAN and Aadhaar and then filing my tax return. So there are some unforeseen myths which I think NRIs have. And let me, I will try to cover this here. I have a FTC slide later.
I have a case like that. We have a person like Aadhaar filing return also.
Yes, so still they are not filing return. They are
Filing return, but not linking the Aadhaar and link.
then they are not liable to leak.
You are not supposed to have Aadhaar in India.
आधा तो होना ही नहीं चाहिए. आधा है भी. So problem is नहीं. I tell you where the problem. I have this problem. So there is this client who is a non-resident. In the portal, it is not allowing refund to come because they are saying your Aadhaar is not linked. When I said, I raised the grievance and I said that he is a non-resident, the grievance got replied also fast. Go to your Geo. Now Geo is in Pune. वो मैंने लाइफ में पुणे छोड़े वो 25 साल हो गए. The problem is the PAN was in Pune. At that time he was resident. So the change has not happened in the PAN database. The filing of return is going as a non-resident. So he said you go to the Geo, you try to change it, and then we will process your refund. Now all these things also, if you explain to another, I say, boss, it's very difficult for me, and then you say, I don't want to file it. The problem is, yeah, first I think you have to file it.
One of my clients, NRI client, they have sold a property in India. They have got the tax deducted, and they buy a property with the sale value, and I will file the return and got the refund also in India. Now the tax in USA, what they are telling, because you have not paid the tax in India, you have to pay the tax in US.
Which is 100% right. This is my next example. You preempted me. So FTC I was going to cover in detail, but let me cover it right now because it's one of the most important topics of today's session. I tell you why. Taking his example.
Sir, now rate is 12.5%.
For long-term capital gains.
No, deduction, TDS deduction on NRI, if NRI is selling property.
No, but capital gains, so that's what it is.
But we have to deduct 20% or 12.5%?
No, so as per right now, whatever you opt for, if it is after, I think you have that option without indexation. If you are going, then you
For
can
NRI
go
not
for
applicable.
not applicable. Right.
NRI applicable.
It is not applicable. So what I will just take this point in detail. Now see, explain. Let's be very clear. Foreign tax credit works in a very simple way. Unfortunately, we have complicated in our lives. You get credit of taxes only and only when you pay. And when there is a liability. Pay का मतलब ऐसा नहीं कि आज पे किया और 15 दिन के बाद रिफंड आ गया तो भी मैं क्रेडिट दे सकता हूँ. It is not on cash flow. It is if you discharge a liability to pay, then you can claim the credit. And this is very important in case of US people. Because see, अगर आप UAE में हो तो वहाँ तो टैक्स ही नहीं, जो भी इंडिया में भरा होगा, it is your cost, right? In UK, in US, in Canada, all these countries, even in Singapore, we have I myself as a client, where we had a live case, the reverse one, I will explain you that. But what I am trying to tell you is, if there is a person, he has a 1 crore of FD with Indian SBI, he is a US resident. He gets 7% interest. 7 lakh rupees, they cut at 30%. 2,10,000 काट दिया. You file your return of income and you show full refund. You get 2 lakh rupees. चलो थोड़ा लाख भी है जो भी है, full 2 lakh rupees in your account. Now under US income tax, you are liable to show your global income. You will show your 7 lakh rupees as income. Now you cannot show this 2,10,000 which is deducted as TDS as a tax credit there, because you got that money back here. Why should US give you something which they have not received? Okay, the problem gets even more complicated. If, and this is for those NRIs who don't file return, most of the NRIs have this notion, अरे इंडिया ने तो 30% काट दिया ना, छोड़ो ना अभी, why we should file return? You know, I always say penny wise pound foolish. अभी हमारे जैसे कोई चार्टर अकाउंटेंट, उनका 2 घंटा दिमाग खाया, फिर बोलेंगे रिटर्न फाइलिंग फीस will say 5,000, 10,000. They will not see that there is 2 lakh rupees refund which is going to come. Now they have another misconception. We will save this charter accountant fees and we will claim this 2 lakh rupees as credit in US, which US will give us. So our life is sorted. Let me tell you, US will never give you this credit.
Right.
The reason is you are not liable to tax in India. You are not liable to pay tax in India. Because of your slab limit, you should get this refund in India. Just because you pay excess in India, that doesn't mean US will give you credit. We have a very live case in India-Singapore treaty where Singapore court, and I think you will remember a few years back, it was very tough to get lower deduction certificate from income tax department. So what we chartered accountants also, even in FTS, in India-Singapore treaty, there is a make available clause. Okay, if your fees for technical services doesn't give you a make available technology, the tax rate should be zero. The withholding tax rate should be zero. अभी इंडियन कंपनी के चार्टर अकाउंटेंट कंजर्वेटिव वाले छोड़ो ना, आप TDS डिडक्ट कर दो, let him claim refund 10% in Singapore. Singapore court, while processing the return of Singapore company, didn't give the credit of 10%. Why India deducted? It was not liable to deduct 10% TDS. File return in India and get the refund from India. We are not going to give you 10%. See, understand from the country's point of view. I am not getting that money. It's not, according to bilateral agreement, that income is not taxable in India. It is taxable in Singapore. Why should I share my revenue with India? Understand this fundamental difference. So whenever a client comes, and I told these people, okay, you are really penny wise pound foolish. Just because of saving 10,000 rupees of CA fees, you are actually making your 2 lakh rupees. And there are certain people who are extra conservative. And Hardik, हम लोग तो return file भी नहीं करते, उसका credit भी US में claim नहीं करते. बोला very good, you have lot of money. Give me that money, I will file return for free. जो भी refund आएगा मुझे दे देना. See, there are two extremes. One who wants to take undue credit, another who wants to pay undue taxes.
Interest income earned in India is also taxable here, because
100%.
we are not paying tax on them until suddenly.
That is different thing. So another good question. PPF interest. अभी ये भी बहुत बड़ा problem है. Are NRIs allowed to have PPF account? You can continue if you are open till maturity. हमारे यहाँ तो सब स्मार्ट लोग हैं. अरे हाँ? Till first maturity, yes. We are smart people. अरे हार्दिक, हम तो बोल, हम लोग ने डिक्लेयर ही नहीं किया बैंक में कि हम लोग नॉन रेसिडेंट हैं. And smartness, another smartness. Interest is tax free. India has tax free, so US is also tax free. Who said? In your dreams? See, because a country's section, a country's provision is to give exemption on certain basis doesn't make the foreign country follow that premise. This even goes for NRE account interest. All NRIs have NRE account FDs, FCNR FDs. There is no income tax on that in India. Absolutely no income tax. But that doesn't mean it's not taxable in US. That doesn't mean it's not taxable in Canada. So the point is see, and this is where I think sometimes we have this dual hat. Technically, we should not advise if we don't have knowledge about foreign countries' taxes. But people who are like, client come family. अरे इंडिया में टैक्स नहीं बना तो यूएस में भी टैक्स नहीं होगा. No, in all innocence, if some person doesn't know, he says, हाँ इंडिया में टैक्स नहीं, वहाँ भी टैक्स नहीं. Now you don't know. Tomorrow he gets an IRS notice, he will come to you. Oh, you told me it's not taxable. I got an IRS notice. And what? How are you going to defend it? So it's always better to say, boss, you check with your CPA there or CA there. And in 9 out of 10 cases, if it follows worldwide income taxable, yes, there are certain countries. There is in UK you have domicile-based tax. In Singapore you have territorial taxation. If there are countries who doesn't tax you, UAE for that matter, UAE doesn't have personal income tax. So any tax which you don't pay in India is not even taxable in UAE. So the point is, make sure that you FTC as a concept should be. Now let me even explain this. When you are and since most of the people raise their hands that they have US NRIs. Now there are NRIs who come to India as a citizen and a green card holder. They become a ROR, retirement India में. They have Indian income. They have US income also. Now I will give you another situation which I think most of you must be having in your mind. In US, in such people will get social security. Must be knowing that US gives social security. अच्छा खासा 6 से, depending on how many years of service you have done, you can get a reasonable 5 to 15, $20,000 yearly as a tax, as an income in the US. Now, if you are an Indian ROR and you are the US citizen, all your Indian income will get taxable in India. The entire income will become taxable in the US. All the income which is sourced in India will be first taxed in India, and the credit of the tax paid, which is payment minus refund, is tax paid, will be taken as credit in US. Now, the other one, you have some income in US, उस पे पहले इंडिया में टैक्स नहीं भरना है, उसमें पहले यूएस में टैक्स भरना है. Then you can claim credit of that taxes in India, but only on that US income. Now, certain income, like in India, you have Indian, NRE interest income, which is not taxable in India, but it is taxable in US. Such things happen even in US. There might be certain income in the US which is tax free. There is something called Roth IRA, जैसे अपने यहाँ PPF है वहाँ पे, तो उसकी income taxable नहीं है. But then in India you have to go and see whether it is taxable in India or not. Now here where you go to DTAA. In India, India will not exempt any income, not even social security. But in India you are DTAA under social article 19 clause 1, 19 or 20. Clause 1 gives a specific exemption for social security payments received by a resident of a state to be taxed only in that state or not in the other state. So then you can go, so first you see the income tax act, do computation, then you go to DTAA and see which are such incomes which can be having different type of tax or exempt tax because of certain provisions of DTAA. Otherwise, life becomes complicated and you have to prepare both the computations in isolation and claim only credit of the income which is sourced in that country in the other country. You cannot do a dual credit. Look, as I told you, people first pay taxes in India on the entire income, तो पूरा income tax वहाँ पे pay करते हैं as a credit, and they do a double dipping, which is known as double dipping, that you don't pay tax in one country and you can claim credit in other country.
What will be the case of the cost of the property or profit here? Suppose in India, on the Indian property, we take the index cost, and balance amount will be treated as capital.
So this is I like. I have all this covered, but sir is asking questions or others are asking, so this becomes a lively section. So this I was going to cover in capital gains, I will cover right away. So like interest in capital gains also, अभी यार इंडिया में इंडेक्सेशन का कॉन्सेप्ट है, उसका मतलब ऐसा नहीं पूरे वर्ल्ड में इंडेक्सेशन का कॉन्सेप्ट होता है. Now when you are filing as your return in overseas country as an NRI, let's take for that example again USA. You have to show your world income. They will say sale value of the property, cost of the property. They will not give you indexation of the cost of the property.
That is not their tax laws.
Sorry?
That is not their tax laws. Indexation is not applicable in.
Of course. But I will give you solution also. Because see, it is not logical, but it is also has to be pragmatic. All income tax law has to be pragmatic. Inflation is there in every country. It's not only in India. So, under India, you get protection from inflation for your properties in the way of indexation. Now, if anyone who has done good study of economics, yes.
Indexation is not allowed in current financial.
Yeah, I'm just talking. I'm talking about past and what he's saying might be true for even last to last year. At least if you have an option to go about. And I'm told this is what that in the select committee they are again going to bring back the indexation. So anyway, let's assume that you have an indexation. Let's assume.
In case of inherited property, there is no cost is no. Whether index cost is
No, there is no cost. That doesn't. You don't have cost. Cost is always there. Cost of the earlier person becomes your cost. Now, most of the properties of 1950, you don't even have the any record also. That doesn't mean it doesn't have cost. And what we go is by the property value as on 2001, the fair value, and then we do the indexation. What I am trying to explain you on the principle, then in India and as a economics, what is the indexation? It's basically your inflation and inflation also affects your currency. Now, what is the why Indian currency always depreciates? Can someone give me answer? Why Indian currency always depreciates?
So interest rates are in India higher than the USA rates.
Okay.
All inflation is import more than export.
No. So I partly right. We have higher inflation. We have higher interest rates. It is byproduct of that. And in general, if you study in economics, I think in 2010, I think the rate was 45, or in 2006, the rate of INR USD was 45. Today it is 85, almost double. It is always a delta of inflation in India minus inflation in US, which gets affected in your currency. So what US do is, it will never give you indexation, but US will count your capital gains in USD. So let me give you a very simple example. You invested in Indian property from US when the currency rate was 50. You bought a property of 50 lakh rupees, 100,000 USD. Today, you sold that property at 85 lakhs. Again, 100,000 USD. In India, you get the indexation, so no income tax. In US also, you don't have to pay any income tax because 100,000, 100,000. So, it's not that you don't, but yes, in some cases, this might not work with you every time. So, in Indian property market, except last 2 years, there was a huge stagnation in the property rates. Even if you see suburbs of this, so you might have got a higher loss by claiming, indexation in India, but that will not automatically result in loss in the US. So this is something you need to be very careful. But what I am trying to tell you is, you don't get indexation, but you get the currency depreciation in the US. Rates of tax, yes.
Resident buying property in UAE under construction. Builder is constructing their property. So the resident is constructed. Builder has been he has a key in India. Some business.
Sorry, this builder
Builder has a key in India.
Builder has a P in India. Oh, okay.
What might be the resident? So when the resident is required to have a key.
टेक्निकली यस, इफ यू नो ही हैज अ पी, बट आज तक मुझे नहीं पता कोई बिल्डर ने मुझे सामने आके बोला हो कि मेरा पी है.
Otherwise, you might be going from the website.
Yeah, but so I don't know if you have read some few months back articles. I had some matters also which I declined. So and now it's a public domain, so I can share.
But we need to see from the business example, right? Not from the capital gain, because the builder is.
When I am booking a property, I don't have to see from any point of view. I am buying property.
If article in DPAA, you have to see business.
But I am buying property, so there is no income component in that sense.
We told you, builder is.
Agreed, but the point is, that's what I'm trying to say. Builder is constructing property in Dubai. He is of Dubai. He has a P in India, but how much of the attribution to P is not income tax को भी नहीं पता कितना attribute करना है. How you will compute that? So there is impossibility of performance of how you will deduct the tax in most of the cases. And let me tell you, and this we will cover under FEMA. This building, the booking of the properties in Dubai has become so, I would say, FOMO kind of a thing. Everyone is Tom, Dick and Harry wants to buy the property. And there are left, right and center contraventions in different types, and I will just say that. So few months back, there was some articles in Economics Times. Many of the Indian residents had got notices from investigation being of income tax that we have a data that you have booked a property in Dubai, in Abu Dhabi. Kindly give us the proof of remittance. अभी आप बोलोगे हार्दिक ये तो कितना सिंपल है. ये सिंपल होता अगर इंडिया के बैंक अकाउंट से पैसा गया होता. Most of these properties were bought from cash, and all this data they had received because they had, I think, raided all the Dubai properties liaison offices in Mumbai, Delhi and everywhere, and they got the names of the people whom they had contacted to book the properties. Now some people must have sent money properly via banking channel under LIS. Some people though bought some from somewhere else the money in the UAE and booked the property. And खुद का पैसा भी नहीं था, UAE में लोन ले दिया without understanding that it's a contribution under FEMA. So the point what I am trying to say is this: buying the property overseas is just something which we need to advise our clients. That is not like very simple. There are some people like Hardik, अपने पास तो international credit card है ना, जाके वहाँ swipe कर देंगे. So the problem is not about ease of you making payment. Problem is how your country laws want you to report. Another thing, the road shows which happens from most of the builders, they show you very glory era, right? अभी क्या है, people have FOMO तो है, but people also want to have good properties and want to pay more because they have a lot of money in India. Now under LRS you are not allowed to emit more than $250,000. So see, Dubai, why would a Dubai builder be care about Indian laws? उसको तो property बेचने में मतलब है, तो वो क्या बोलेगा कि भाई ओके आपको प्रॉब्लम है ना, 2,50,000 से ज़्यादा नहीं बेच सकते. You send $250,000 right now, we will take a loan on behalf of you from the bank. So you book $2 million property. बाद में बेचते रहते हैं every year. Am I allowed to take a loan outside India? The answer is no.
No way.
Sir, आप ऑनलाइन बोलते हो no way, लेकिन बहुत सारे hundreds of transactions has happened.
So they are all, they are on the threshold of the getting caught.
So the point is, most of this has happened because people don't know laws. They are going by pure assume कि अभी suppose कोई बड़ा builder है, अरे ये बड़ा builder ऐसा थोड़ी बोलेगा, उसको तो पता ही होगा laws. He doesn't know Indian law. Why he should be even telling you Indian laws? He wants to sell his property. So the point is, make sure you do proper do's and don'ts again when you are sending remittances under LRS. Yeah, tell me. Can we have mic? So at least I can hear properly.
So Article 7 need to correct. For in that example, like you get buying property in Dubai. So Article, suppose legally we want to see, we have to apply business profit article.
Article 5 read with Article 7.
Sir, LLP has a subsidiary company in Singapore. While made investment, that rate of dollar was 65 rupees. Now they are taking by that. So same amount is there. There is no increase in that. But due to exchange rate, LLP has a gain.
Yeah. So you have.
What will be happen to this?
So Rule 119, if I'm correct, it has this coverage. You can read that. It's a very straightforward rule. They are also, like I told you, in US you calculate, here also when a resident is investing outside India, you get the benefit of foreign exchange. You have to calculate and then you have to show that in INR amount. So if you read that rule, if you want, I can send you that rule also. It's a very straightforward. There is no complication on that.
But there will be exemption in repatriation.
So if an LLP, now you are asking me repatriation of the money, right? Under FEMA, if you have invested in a subsidiary in Singapore, if you have done the OI regulations filing for MCFC, there is no limit. You can bring even $10 trillion. India बहुत happy होगा. So it's not about how much money you bring, it's about whether you are compliant. See, I have seen many people who are investing overseas without doing any FEMA compliance. No FEMA compliance.
Sir, I am asking about taxability of.
So taxability, that's what I'm saying. Taxability, if you go by that rule, you would, if you say you have no profit and gains in dollar term, it should be no taxes. If you go by that rule, I'll share that rule with. I'm not, because I had NRI as a thing, so I didn't cover the opposite. Otherwise, I would have given in this slide. But I am also giving you the second point. When you are asking me repatriation, make sure when you are repatriating, you repatriate while cancelling that UI. हमारे यहाँ people don't know the procedure till they get back the money. What happens? I have seen many people who have invested overseas, made subsidiaries, 5 years, 6 years, 7 years. Now the company is getting closed or liquidated or sold. अभी जब पैसा आ रहा है तब पता चल रहा है because banker is not allowing you to credit the money. It's not about taxability anymore. It's about have you complied with the law. So yes, so if you have filed your APRs and everything, then yes, there should not be, and it should not be problem also in the income tax also. Yes, one more thing. Have you declared this in your FA schedule? Yes. So this is another thing which needs to be very, very clear. While coming to FA schedule, let me tell you, FA schedule doesn't apply to NRIs and RNOR. It only applies to residents and the companies and LLPs. But Schedule AN applies everyone. So if you are the NRI and if you have, now we are going a little bit on compliances of ITR. If you are NRI and you have more than 50 lakh rupees of interest and dividend income, you have to file your Schedule AN. अभी यहाँ पे मुझे क्वेश्चन आ रहा किसी ने पूछा लेकिन एसेट लायबिलिटी मैं थोड़ी अपनी पूरी ग्लोबल बैलेंस शीट यहाँ दिखाऊंगा. No, you don't have to prepare your global balance sheet. You just show your Indian assets and liabilities. You don't even have to show any asset which you have outside India in your Indian return if you are filing as an NRI. This is a very simple one. Now there is we will cover the whole special tax regime, but one of the sections under special tax regime is one of the sections under special tax regime is section 115G, where an NRI is not required to file ITR if the income only has investment income like interest, dividends, or long-term capital gains from specified assets acquired in foreign currency under Chapter 12A. We are going to deal with this Chapter 12A in detail. And TDS has been rightly deducted on such income, and NRI doesn't have any other taxable income in India apart from this. So this is another very big, I would say, saving. So any person who has investment income and the TDS, now this is a very tricky part. अभी problem क्या है? Let's assume you have FD which SBI, and I think most of you, I don't have to take a poll. Everyone has stock market shares, right? Everyone must be getting that mail from every company. If you have non-resident, give us declaration, 10 FA, we have to deduct. If you want to have DTAA benefit, give us your tax residency certificate. Every company is sending this nowadays. Why this? Because if you don't give that, they will deduct at the highest rate under the income tax act. The same goes for the interest. Now, in most of the cases, the banks will deduct in TDS at 30%. Under special tax regime, the TDS rate has to be 20%, or your tax liability has to be 20%. But government is, and this is for those NRIs who doesn't want to file return. Now, I don't agree that person should not file return, because what it says, TDS has been correctly deducted. Now, what do you mean by correctly? If TDS has been deducted more than, then it doesn't follow. So people whose income is there and is more than that 5 lakhs or threshold limit and have deduction of tax much more than what the limit is, I think it is a right case to file return and get refund. Just because of this exemption, you say no, I will not file return because the TDS is deducted, you are losing money. Technically, it says that correctly the deducted on such income. If suppose the TDS is less also, then also this is not applicable. Suppose there are, you must have given some declaration to bank. Then I am a tax resident of Singapore, I am a tax resident of UAE. You don't deduct TDS as per income tax rate, you deduct TDS as per 10%. Now that doesn't get the benefit of non-filing tax return, because the tax has to be correctly deducted under Chapter 12A, not under DTAA. DTAA benefit can only be claimed if you are filing return. नहीं देते पहले देते थे, but now it is much more.
अभी ऑनलाइन हो गया है, फॉर्म 10 है, फिर PRC और CPC डायरेक्ट एडिशन कर देता है. PRC नहीं होगा तो और कोई भी ना.
You do it NFA.
तो 10 ईयर का बीता होता होगा भी चलेगा, गोल्डन बीता 10 ईयर का होता भी नहीं।
Sorry?
10 ईयर बीता, 10 ईयर गोल्डन।
No. That is your visa to stay there. That doesn't make you a tax resident. Even with 10-year golden visa, you can still stay 2 months in a year. Golden visa is given for you to not again take visa. It is for your convenience. That doesn't give you a tax. It is not like even green card. So if you have a US green card, that doesn't make you as a staying more than 182 days there. So 10 FA है ना, 10 FA. So there are people who are going to take, but see what is 10 FA? Technically TRC होगा ना, in the format what Indian government 10 FA is not required. Read that clause. This is another myth, and I have read this 10 times and told everyone है, अरे TRC and 10 FA चाहिए. अरे TRC देखो, अगर TRC में जो details 10 FA में चाहिए, वो TRC में है, then you don't need 10 FA. We have this checklist बना दिया है because everyone wants to conservative. वो companies भी आपको Reliance LLT से आएगा TRC 10 FA no P certificate blah 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 blah. But technically, if you read that clause, if you have a tax residency certificate which gives all the details, name, address, number, and everything, and the year of the residency as per 10 FA, you don't need 10 FA. 10 FA was brought in to make sure that you give that details without you having a TRC.
Sir, one more related question. UAE gives TRC for calendar year, say calendar year 24, and we follow the financial year. So transaction ended after January, say 25, is covered under that TRC?
No, if you are not covered in that, it will not. Then you might have to wait for another year's TRC. You have to give both the TRC for that financial year. Correct, and that's the reason I would say, and for UAE I can answer, now they have changed their pattern. Last year they had the same thing, but now they are giving after 90 days in that calendar year. So today I can get a TRC for 2025, even 24 and 25. But you are right, so let's assume we are applying for US TRC. US I will get TRC only for 24. They will not give me TRC for 25. So that will, then in that case I agree with you. Then you have TRC and 10 FA both. But just don't blindly. Now in UK also you have April to March, right? So in that if you have a TRC for April to March, then you don't need to have a 10 FA for the same. If that goes by the parameters of the what 10 FA needs. 10 FA and no P, yes, of course. What, you don't have a choice. You have to think there are some countries, you are right, there are some countries who doesn't give you TRC, yeah? But you are a tax resident. You have proof of tax residency. 9 out of 10 times people who have income tax law, they will give you TRC. Unfortunately, in some cases, even in US, the timeline to get a TRC is 8 to 10 weeks. Now what do you do till then? Okay. Sorry? Online, no? For the person to whom you are remitting. Yes. Yeah. हाँ तो ईमेल आईडी और मोबाइल नंबर तो देना है. अपना क्यों उसका देना है? हाँ तो जाता है OTP. हाँ ऑनलाइन फॉरन जाता है अपना भाई. We have TRI सब एयरटेल जियो सब भेजते हैं. बहुत so starting में there was issues of sending OTP, but it goes. And so thanks. Please don't give your email ID and mobile number in anyone's 10 FA. Please. इतना भी अपने को So ITR filing is required, and if they don't have fund, they can give their India number or their office person. Why should we give our India number?
email तो जाता है, email भी तो होता है.
Email तो जाता ही है, 100%.
email तक रखना है.
You need both. You need both email and mobile both.
Email is much better when you get quick immediately.
What he's saying, if I don't have a mobile number in India, can I give phone number? Answer is yes. But what if I don't receive the OTP or phone number? Then you give more, tell him to give an India number. You don't give your India number. Tomorrow the notice will come to you. Correct. I tell you, we give more service than what we are paid for. NRI should file the return. I think this is all straightforward. I am not going to all this. 10 FAs are covered. So I think we have half an hour. I will cover something which is, this all is more of information. Yes. So again, I think I covered partly this. Now, very, very important for NRIs who are returning India for good. I have seen people having NRI deposits for 5 years. अरे इंटरेस्ट रेट बहुत अच्छा है, इंटरेस्ट टैक्स फ्री है, बोलना ही नहीं हम लोग रेसिडेंट एंड वो तो चलो छोड़ो, they open resident account separately. That bank has that NRI account. Indian CA को भी बोलते हैं, अरे NRI का टैक्स फ्री इनकम है. Now read section 10(4). It says the interest on NRI account is exempt if you are a non-resident under FEMA. The moment I open a resident account, I become a resident under FEMA in India. By just having a non-resident account, which resident account, you are already having a contravention. That doesn't make your interest on NRI account or FDs as tax free. And this is very important because most of the bankers, if you go to a banker, let's assume you have given some high value deposits to him. You tell him, boss, मैं resident होगा, मुझे deposit तोड़ना है. वही बोलेगा, sir, deposit मत तोड़ो, छोड़ो. Don't break the deposit. I will continue till maturity. Yes, you are allowed to, but that doesn't give you right to continue the exemption till maturity.
What about FCNR?
Same. So FCNR you have exemption till maturity, but FCNR so let's assume you have 4 years or 5 years, right? Till then you can enjoy. FCNR is irrespective, you become a resident. But NRE you cannot. FCNR, so both sections are different. 1023 जो FCNR का section है, there is a specific provision of interest exemption till the maturity of the deposit. That doesn't exist in NRE.
Sir, because of this, many residents went out and they don't inform the bank for conversion of normal saving account.
I think I told that at the start only, they are contraventions. Unfortunately, RBI is not going to come back to you because they don't have that much power, that much bandwidth like Income Tax Act. But that doesn't mean you are doing the right thing. And let me tell you, there are compounding orders where people who have continued with their resident savings accounts after NRI and they have done some transactions which is not permissible as an NRI, like giving loan, repayment of loan, there RBI has come down heavily and compounded. I can give you compounding orders on that. Abhi problem क्या है, and this happens in most of the cases. It happened with me also personally. हाथी के हाथी निकल जाता है तो हम लोग जब बोलते हैं अरे इनको तो आता ही नहीं कुछ. Why so conservative? Now you have a good luck that you are not scrutinized. That doesn't mean the law is that way. The law is very clear. Once you become a non-resident, you just cannot continue a resident savings account.
Can you request them to close this resident account by NRI?
Yeah, you can close.
Immediately close.
Yeah, you have to. That's why I'm saying you need to have the do's and don'ts. We have very clear, when a person becomes a non-resident, we give him X, Y, do's and don'ts. You won't believe, and this is another important thing. Sorry, I'm going into because this is very important. Under even mutual funds, some people who become NRI, not some people, all people who become NRI, they are not allowed to apply to all schemes. If you are an NRI, you ask any mutual fund advisor, अरे मुझे mutual fund में SIP दे, वो आपको 10-12 scheme ही देगा out of hundreds of schemes, because every mutual fund which has every mutual fund house have only few schemes dedicated to NRI, though other all are resident mutual funds. So if you become an NRI and you don't inform that, technically you are also making a wrong declaration to them. This also applies to life insurance policies. If you become an NRI, you don't tell your life insurer that you have become an NRI, there might be an issue. If the unforeseen circumstance happen, you might not get your claim in your account.
Many times they transfer the money remittance also from overseas and then procure the properties and might lead to what to file.
Yeah, might, I think if you can transfer the mic.
These policies can continue after becoming NRI.
Let's have the mic. Yeah. I think you can transfer whosoever can transfer the mic so everyone can benefit.
So in this continued example, many times NRI transfer the remittance to their saving account earlier on, and they procure the property also. They are, and without informing them, it's a normal buying of the property. So what consequences are?
So if you are buying a property from a residence account, your transaction itself is wrong. And let me tell you, again this becomes a very big question on the repatriation of these funds. See, today under FEMA, when you buy a property, when you sell a property, you are liable to take that sale proceeds in your NRO account. If you take in your resident account, that's a contravention. If you are having a resident account, your limit to remit money outside India is $250,000. If you have an NRO account, your limit is $1 million. So you are yourself, मेरे पाँव पे कुल्हाड़ी मारा. I am allowed to remit $1 million by getting money in resident account and limiting that to $250,000.
Not sell, procurement.
तो आगे जाके तो सेल करोगे, प्रोक्योरमेंट तो है ही, बाद में सेल भी करोगे and you get the money in the same account. You are technically everything which applies to a resident will apply to you in that account, which is incorrect. Yeah.
The two family member, one is NRI and one is a residence. They are relative under section Companies Act 1956, but they are not relative under section 1913.
Okay.
But due to family settlement, they want to give one immobile property house to whether FEMA is permissible or not.
If I repeat, can you repeat your question?
One is NRI and one is the residence.
Okay.
Both are relative under Companies Act 1956 as per definition of that time. But recently, as per 1913, they are not relatives.
Correct.
So they are not relatives. So as per FEMA, they cannot give the property to the NRI.
Correct.
Or is there any way of giving?
No, it's not the way. If you can only gift your property to a close relative, it's very clear. In fact, let me tell you. So we will cover this. Let me go to FEMA. I'm going to cover on some part of the.
But Reserve Bank permission is.
You can apply. Most of the such cases will not get permission.
Okay.
Can resident and non-resident have joint account?
No way.
No. NR account? Yes. So I have that. So sake of convenience, what we say, right? You can have it, but you cannot have as a resident for my purpose NRE account. I'm not allowed. So most of these students or most of these, I would say, people who are working outside India, they have their parents in India. So they make them as a joint as a sake of convenience. But the primary name is the non-resident. Yes, sir.
Shipping, one who goes on a ship or one who drives an aircraft or a boat is a resident in India first. Later on, as per Income Tax Act, because he is staying outside India for 182 days, the income tax will file it as a non-resident. My question is, in the savings bank account, does he have to declare that he has become a non-resident and change his ordinary savings account into an NRO account?
Yes.
Or can he do without it? That is first question.
He has to. The moment. So let's. So that's the point. We completed the discussion on resident status under income tax.
Yes, sir.
Let me take 5 minutes good to explain the residential status under family.
Yes, sir.
I will explain and that will answer your question.
Thank you.
So residential status, unfortunately, I have no slides on that, but let me just cover it. Residential status under FEMA is stark difference to income tax, though when you read, you will find it very similar. Both has 182 days in preceding financial year, current financial year. But FEMA is based on intention. FEMA is a transaction-based law. Income tax is a periodic law. Now, if I am a person who is going on an employment outside India, in your case or for that matter any other case, can I wait to complete 182 days in current year and next year I become a non-resident? No. Because when I will become a non-resident, let me give you a very simple example. Today I got a job overseas. I went on 1st of June. On 1st of July, I wanted to buy a property. I asked my friend, my uncle, please lend me some money. If I don't convert my account into NRO and don't become non-resident under FEMA, this is a contradiction. As a resident, I cannot borrow money in USD outside, in foreign currency outside India. So what I am trying to tell you is, under FEMA, the FEMA definition starts as is, person is a non-resident if you spend more than 182 days outside India in the preceding financial year. However, you can become a non-resident from day one if you are going on an employment, if you are going for business and vocation, or if you are going for uncertain period. Let me give you another example. I am a retired person. I have my kids in the US. They want me to come and help them, in their daily works life, and they want me to stay with them because it becomes very difficult. They have applied a green card for me and now I have a permission. Otherwise I can stay under 6 months on B1, B2, but they have applied green card and now I can stay more than 6 months. I don't have any plans to work in the US. I go and reside with them for 6 months. Now, I'm not going for employment. I'm not going for business vocation. But my intention is to stay for uncertain period. I don't know whether I'm going to come back to India again. Tomorrow, after 2 years, after 5 years. I will become a non-resident from day one. What two things we need to prove non-residents under FEMA? One is, when you go and apply to the bank and tell them to convert your resident savings account into NRO account, what will bank do? Give me your visa for going and shifting to that other country, or permanent resident card, PR card. The moment you do this, it gets done in 2 days. It's an easy process, but people don't want to do that. Now, the case becomes very difficult where you don't know whether you're going. I have seen people who are going overseas on visit visa, by job mila, तो रह जाएंगे, नहीं मिला तो वापिस आ जाएंगे. In this you cannot apply for non-resident while before going. You first have to take job, then you have to send that visa status to your banker, and then they will convert your bank account into NRO.
Sorry.
Yeah.
Sir, taking this question forward, a very important thing that you just suggested or spoke about a few minutes earlier. In the case of non-residents who have been abroad and who have kept their NRI FDs in India,
right.
There is no clarity in law. As per whatever little I have understood the law and the RBI, I have not read the FEMA, but there is no clarity in law that says that you are supposed to declare that you have come to India for good. You are retired from abroad and you've come to India for good. Now, the perception is that the non-resident continues to keep his NRE FD. He doesn't pay interest thereon, though legally has
in tax thereon.
Yeah, in the income tax domain. But as per FEMA, since there is no clarity because RBI is silent on it, the bank managers will say, sir, continue रखो, ये FD तोड़ना नहीं है, जूना interest है, आपको TDS भी नहीं लगता है. Now, in my opinion, that is wrong.
I think we discussed that. Let me summarize once more for you.
Sir.
So the point is, bank might say anything. And if you understand what I just said, it's an intention-based law. Now that doesn't mean the day when I come to India, I have made up my mind it's for good. It might so happen that I come to India and I'll say, after 3 months, bye. यहाँ पे पॉट से मुझे वापस जाना है. That doesn't mean I have to become a non-resident under FEMA. Let me tell you, you can still be non-resident under FEMA after staying 182 days in India if your intention is to go back. And I have seen this for medical cases. I have clients who are non-residents who doesn't want to stay in India, but they have come to India for some medical treatment which is lasting for two years. 1 year or 2 years. But then you need to be very mindful. If you stay in India for 1 or 2 years, you will be not allowed to do certain transactions which your residents are allowed to do. But यहाँ आके किसी को लोन दे दिया वो सब नहीं चलेगा. You can't have best of the both worlds. Either you make your intention clear, you want to stay. FEMA doesn't tell you that you can't stay more for 2 years non-resident and then again become. You can become resident in 1 year and become non-resident in another year. It is pure intention based on. But that doesn't mean that it says नहीं 182 days हुआ तो ही होगा, 182 days नहीं हुआ तो नहीं होगा. I have seen clients who become a non-resident in 1 year and resident in another year, again non-resident in another year. Because it's an intention based law. हाँ, income tax में आपने ऐसा किया, जगलरी non-resident resident, non-resident resident, 100% 4 साल की स्कूटी नहीं आएगी.
Thank you.
Yeah. So there is this special provisions for NRIs 115C to 115I. Now, who can avail these facilities? All those who are NRIs, PIOs. What are the facilities of these special tax provisions? It applies to all your investment income and long-term capital gains from your foreign assets, foreign exchange assets. Now, what do you mean by foreign exchange assets? Any income which you are generating from investment from the money you have brought to India, not from the money which you have in India. So don't be in that mindset कि इंडिया में 10 करोड़ था, मैं बाहर चला गया, वो 10 करोड़ रेसिडेंट में से नॉन रेसिडेंट एनआरओ अकाउंट में हो गया, अभी वो 10 करोड़ के ऊपर जितना भी इनकम है उस पे मुझे ये स्पेशल टैक्स एग्जेम्पशन मिलेगा. नो, दिस इज फॉर द पीपल हु आर अब्रॉड, who send money in foreign exchange, bring that money in NRE and that gets converted into NRO. You invest in portfolio schemes, in mutual funds, in under specified assets. In that cases, the income which you get this special tax concessions. It is not for your resident money. Now someone has and this is even there is a case law on this. You can go to Income Tax Act Master Guide. You will get this case law under 115 Act. That someone has said that I was a resident, I had all my money in India, I moved all the money from my NRO account to NRE account. Now I am investing that money again from NRE account to the. Should I not be allowed this tax exemption? There is case laws on both the sides. I would say it's a very tricky situation because the exemption is for people. Government wants foreign exchange to come. They don't want you to take this concession just by changing your residence status. So I would go by a conservative view. All the money which you are bringing to India and investing, you get this exemption. The Indian money which is lying in another account before going outside India will not get this exemption.
What about capital gains? Capital gains.
Long-term capital gains will get. Short-term capital gains will not get.
Long-term capital gain or if reinvested in.
No. Any long-term capital gains you acquire assets from your foreign exchange brought to India, you will get this concession. And specified assets has been declared as shares in Indian private limited company, debentures, any security deposit, any other security. It doesn't include mutual funds. Mutual funds have a separate slide altogether, but it doesn't include mutual funds. What is the special rate? Investment income 20%, long-term capital gains 12.5%. 115G we have already discussed. By the way, there is also another special provision. You can continue the special tax concession even after becoming residents for your assets which you have acquired while you are non-resident if you write to ITO while filing your return after coming to India. Under 115, if you opt for these special provisions, in the year when you come back to India, you become a resident and say that I have acquired XYZ shares, I have acquired XYZ deposits, I am getting income, I would like to take the exemption concession in this, then you can do, but you have to inform and you have to file that along with your return of income. this is what it is. The declaration option is available in the ITR form itself. One has to check the relevant box to take this one. Then once the declaration to become a resident is made, NRIs can retain the benefit of special provision for their investment every year until they transfer or convert that foreign exchange into Indian money. So into your regular other. So if you break that FD, if you break that thing and you do some other investment as a resident, then of course you don't get the concession. But till then you can continue to have it. Now concession also of that 12.5% and 20%. It doesn't go off that exempt NRE deposits. I think we discussed this residential status earlier. Yes, I will. I'll come back to this, but I need to just cover this. This is very important.
If a resident father give money to a non-resident daughter, any issues are there?
What? क्या देंगे?
Any gift?
Money under 2,50,000, yes. Up to 2,50,000 dollars.
No, resident father giving to non-resident.
Yeah, you can give 2,50,000 dollars to your non-resident. In fact, you can give anyone. अगर मैं non-resident हो जाता हूँ, आपको मेरे पे प्यार आता है, मुझे भी पैसा दे सकते हो 2,50,000 dollars का. Anyone.
In foreign gifts are taxable, no?
He's asking, I'm right now. Let's assume you are in UAE. In UAE, gifts are not taxable. But up to $2,50,000. Now, no, so FEMA problem, no, इसमें कोई फर्क नहीं. FEMA problem is in another. How many of you have seen a transaction of gift of shares and mutual funds by resident to non-resident? Raise your hands. Gift, normal gift by resident to non-resident of shares and mutual funds. Let me tell you. And more for shares. Let's put mutual funds for the side. Under FEMA, there is a restriction. You cannot give shares of any Indian companies without RBI approval to a non-resident. Even 1 rupee. So agar kal utke, if a client is coming to you, I have my son and daughter overseas, I have Reliance K shares, I have my Indian Private Limited Company shares, I want to transfer those shares to them in their demat account. Can I do that? The answer is no. Can I do that with prior RBI approval? Yes, but dual conditions. The transfer has to be at amount less than $50,000 fair value. अभी लोग बहुत स्मार्ट है. मैंने एक जन को बोला $50,000 तक आप कर सकते. हाँ ठीक है, अपने तो 1 लाख का कैपिटल है, 1 लाख के शेयर दे देता हूँ. 1 lakh is face value, it is fair value. So the amount of fair value of the shares transfer should be up to $50,000. Plus, the shares transferred should not be more than 5% of the outstanding share capital of that company. So if it's a private limited company, you cannot transfer more than 5% subject to $50,000 limit. That too under prior RBI.
Instead of gift, it is coming inheritance.
Sorry?
Instead of gift, if it is by inheritance, NRI.
Inheritance is different. I am right now only talking about gifts.
So 50,000 is per year or
Per year.
What is the case if it's not shares, but immovable property?
Immovable property you can give. So immovable property there is a planning possible. How you plan in immovable property? So in immovable property you can give to close relatives without any limit, but ultimately if that property is sold, it will go to his NRO account. So what planning you can do is, you can remit only $250,000 to your son and daughter. I want to give them more. So property $1 million के वो उनको गिफ्ट दे दो, tell them to sell and take out $1 million in that way. Because NRIs are allowed to take $1 million outside India. Yesterday we had this FEMA course, and of course I know that liberty to go through. But these all things gets very complicated under succession planning when you involve trust in this. If you settle a trust, the whole complication under FEMA is at a different level altogether. We might keep it for some other day. Yes. Peculiar to India, US, and might be some other countries also, because most of us have clients from NRS, US. I will touch this. India, US has a very peculiar capital gains article. It says, Article 14 says, gains from sale can be taxed as per the domestic law of both the countries. Can be taxed as per domestic law of both the countries. Recently we wrote an article on FTC regarding this, and if you read the law of Indian domestic law and US domestic law, technically there is a double taxation. Treaty doesn't give you any right of tax to either of the countries. US says if you have a worldwide income taxable, it's taxed in US because it's a personal property. India says it's the shares of the Indian company, so it is taxed in India. So technically, the tax is in both the countries. This is a very big discussion point if people are aware. Those who are not aware, blessing in disguise. India में tax pay करो, US में credit लो, कोई पूछता नहीं, कुछ होता नहीं. Another thing, if you have paying taxes in India, US, the taxes get credit only under federal tax. Those who have US NRIs as client, in US you also have state taxes, state income tax. You don't get credit of Indian income tax against state income tax in the US. This is very important tiebreaker tax. This is why important, at least for people who are tax resident of both the countries. If you really want to come out of dual taxation, you have to tie break in favor of one country. And let me tell you, in my 15 years of experience, there are very few people who are going to do this because it's very, very time consuming, and you might have to convince in either of the tax departments to agree with you that I tie break in favor of this country, though I have a resident of this country also. There are mutual agreement procedures also bilaterally on this, which has entered, but this mainly people do if they have a very high value of transactions and they are taxable in both the countries. अभी सबको ये आया होगा ना, वो रील आता है इंस्टाग्राम पे, इंडिया में कोई म्यूचुअल फंड पे टैक्स नहीं है, कैपिटल गेन्स पे टैक्स नहीं है. इकोनॉमिक टाइम्स हैव आर्टिकल, मिंट हैज आर्टिकल, which was there for many years. ओवरनाइट नहीं हुआ. मुंबई आईटेट का एक डिसीजन आया फॉर अ सिंगापुर रेसिडेंट who claim a credit, who claim that my capital gains is not taxable in India of Indian company because 13(5) article gives me taxation rights only to Singapore. The moment this case law was there, and it was all over the media, and people started making, become NRI in UAE, invest in mutual funds in India, earn tax-free income, no taxes in India, no taxes in UAE. Let me tell you, yes, these are possible in certain countries because such clause 13(5) language, India, Singapore, India, UAE, reads as gains from alienation of any property other than that referred to paragraph 1, 2, 3, 4, which covers shares and other assets. It doesn't cover mutual funds. Shall be taxable only in the contracting state where the alienator is a resident. So it's only taxable in UAE. Now let me tell you, this is going to be litigated very hard, and I might be not wrong in saying that the government might review these clauses with these countries in future. But it's not very easy to also claim these benefits unless and until you prove your tax residence in that country. Again, going back to TRC, I would not tell anyone to take benefit of this clause unless they have a valid TRC. Because AO will definitely go in detail. The moment you say I sold 10 crores of mutual funds, I am not going to pay any taxes, and there is a withholding which has happened, I want the refund. He will not go give the refund unless he scrutinizes your tax residency. Just by, and I have seen many people know that areas, hundreds of crores of mutual fund है. अरे काम करते नहीं, दुबई जाते, एक साल के लिए नॉन रेसिडेंट हो जाते, इंडिया में सब बेच देते, कैपिटल इज टैक्स फ्री एंड कम बैक. You don't know something called GAR. GAR નો બહુ meaning છે, બીજો meaning પણ થાય. But the point is, you need to be very, very careful that The Income Tax Act has all the checks and balances to come after you if you are just doing a treaty shopping. If you are non-resident, if you are resident of those countries, definitely this is a planning opportunity. I won't say this is even a planning, this is a more of an exemption which is given bilaterally while agreeing when you are signing this agreement with that country. And let me tell you, NRIs are always the special child of Indian government. We get stepmotherly treatment. Unfortunately, Indian income tax में non-discrimination clause नहीं है. Otherwise, I would have filed a writ petition that I am discriminated. But the obvious is they send you dollars, they send you foreign exchange, which we always are scared of. We have scarcity of that. So the point is, yes, you can get this exemption on the gains of mutual funds, but make sure you have the TRC, make sure you are not doing this just for the sake of 1 year or 2 years. It has to be done only if you are a resident of that country. With this, I have almost done with my time. And thanks again for giving me this opportunity. I hope I will be able to cover as much as I can. Thank you.
Thank you, Hardik bhai. It was really a wonderful session. He cleared many of our doubts on the NRI taxations and the FEMA related issues. Without wasting much time, I request my colleague and past Deputy Convener C.A. Sikandar Yadav to present a hearty vote of thanks to Hardik bhai.
Thank you, Hiran bhai. It is a great privilege and honor to propose well-deserved vote of thanks to today's speaker, C.A. Hardik Mehta. Sir has explained the topic in detail, keeping more interactive with real-life examples. He has suggested various important points for the benefit of members. Thank you, sir, for accepting our invitation and sharing your knowledge and experience by way of beautiful PPT with charts, case laws, etc. On a lighter note, for NRI, मैं हर साल बस ये गम लेकर चला, ना मैं यहाँ का रहा ना वहाँ का रहा, पर टैक्स हर जगह भरता रहा. Thank you, sir, once again. Now I request members for loud applause. Thank you, sir. Now we'll have a 15-minute break.